Today we are drilling down to matters the Nairobi Securities Exchange and investment, and focusing on the matters of the derivatives market, which should be rolled out tomorrow by the exchange. And in studio, I have to my immediate left Tony Watima, who is an independent economic consultant and a columnist with the Business Daily. I have Sarah Wanga, who is the head of research at AIB Capital. And I have Rufus Kariuki from the Nairobi Securities Exchange, where he's the business development manager focusing on derivatives. And we have been discussing matters around contract sizes and how people can participate in this. And Rufus, you did mention that one of the incentives is that unlike the spot market where I have to pay up front before I begin trading in the stock exchange, now here I only pay a margin. And a contrary view to this, or skeptics would say that part of the reason why you pay upfront in the spot market is that you are able to put your skin in the game or to invest where your analysis is based. But now in the derivatives market, if I'm only putting 10% of what is required, then the appetite for more risk is likely to increase, right? And this presents a risk for the market.
I'd say there, to your point, risk will definitely be amplified in terms of leverage, since that is leverage.
Absolutely.
But there is different investors come to the market to satisfy different needs, okay? So if you're coming to the spot market, the share market, for example, you want to own the underlying stock. You want to get the capital gains if Safaricom moves from 27 to whatever amount it can move to. And you also want to partake in dividends, right? Mm-hmm. What the derivatives market offers is what we call an efficient way to deploy capital, okay? So a fraction of that gives you that exposure, and then you can also use that to manage your risk. So you can see those two investors are coming onto the market to do very different things. One is coming to get actual ownership of the shares, and while the other counterparty is coming there to effectively manage their risk and deploy their capital more efficiently. Because, for example, if I'm not paying the entire 27,000 worth of notional for Safaricom and I'm paying 2,700, what does that leave in my pocket? Mm-hmm. Roughly 24,000, right? Correct. I can use that 24,000 in other asset classes or other investments just to try and diversify that portfolio. So the beauty about the derivatives market is that it gives you so many strategies that you can deploy and employ. So for you, I think for fund managers and investment managers out there, it should be something that they should be willing to pick up quite quickly, since it gives them a lot of flexibility in managing their portfolios. And
Sarah, I'll be getting back to that point that you just mentioned from you, but let me get to Tony at this point. If you followed the budget 2019-2020, sorry, Treasury Secretary Rotich made a raft of proposals to try and incentivize the listing of small and medium enterprises. The GEM segment was launched in 2013, and effectively we haven't seen much activity, unfortunately. Yeah. But what he was proposing is that to the degree that tax amnesty would be offered for SMEs who are willing to list but haven't had their books in order for the last 2 years or so, he said. Do you feel this is a measure that is significant enough, one, to catalyze investment in the stock exchange, but two, don't you see there's a risk in this? Because if I had my books not in order for, let's say, 2 years, and I'm being encouraged to list, what signal does that send to the market?
Yeah, I think that's the biggest point about it, the risk that comes, because if you haven't been like saying your books are not good for 2 years. So there's a risk in itself, and a risk compliance specifically. And so one of the probable things that many people are not compliant in terms of their bookkeeping is that probably have high taxes. And so people try to play games around that. And so what are the risks that SMEs can bring to the market itself when they have such kind of a nature? I don't think that's what when the budget policies Rotich was trying to present looked at that thing. But it's a good thing that we try to incentivize SMEs coming into the market itself. I think one of the biggest things is providing capital to SMEs, which is one of the biggest things that we still face in terms of formalizing SMEs to scale up. Yes. So the market itself provides a good platform that they can raise capital, but I think we need to take time and try to structure things properly so that we don't have too much risk on the market itself.
All right. Sarah, in terms of the proposals being tabled by the CS, do you feel that the SME market is at a level of readiness where we can have a number of listings coming into the NSE in the near future? Forget about what we have as the Ibuka program, but just the level of readiness for the market.
I think currently there's, the measures that have been introduced the tax amnesty would probably incentivize a few companies to list. I think one of the reasons why SMEs have probably not listed before is because of the tax. So, and then the increased scrutiny that comes with listing of a company. So, and then there's also additional costs. So there's some of the measures that, some of the reasons why they haven't listed. And so going forward, at least Rotich has tried to address one. More needs to be addressed in terms of cost. If that comes down, that could probably help. And also for the market as investors, we need companies that are solid for once they list. So if they list in the gems, because historically we've had companies list in the gems, and a few years down the line they are delisted for one reason or another. And so we need to restore that market confidence. So apart from that tax amnesty, I'm sure the NSC is doing this. It has taken a few measures to ensure that the companies that actually come at least are solid companies, and will help restore investor confidence in the future.
And just before I depart from your point and get to Rufus, we've seen a lot of private equity activity in this market. And for example, if you look at the investment going into Java, the coffee chain, that many would argue would have been a company that would have easily listed in the market. Do you feel this is derailing the appetite for the stock exchange, the high private equity activity in the market?
Okay, so private equity presents an alternative for companies to secure funding. And given that there have really a number of companies, private equity companies have mushroomed over the past few years, they have a lot of capital, and they're looking for companies to deploy the capital on. And so one advantage of having private equity firms in the country is that they help small businesses grow. So with time, they're ready to list on the NSC. However, concern has been that when these companies actually grow, the private equity firms would prefer to list internationally, because we've had like ECP listing some of its companies in the London Stock Exchange, and then others would sell to other private equity firms. So I think there needs to be policies put in place that would help these companies to list in the Nairobi Securities Exchange.
Correct. And Rufus, getting back to you, and we're talking about derivatives, and we just finished the issue of the contract sizes and how the risk is managed. But let's look at the two main players we have in any derivative market. We have those who are coming to hedge their risk, and those who are coming to speculate, those who have high appetite for risk, if I could say.
Yeah.
How do we ensure at the Nairobi Securities Exchange level that we don't have a market skew where we have a lot of speculators but very few people coming to hedge? Because that is a common problem afflicting a number of derivatives market across emerging economies.
Okay, so in terms of the different category of players, you'd appreciate standing even from the exchange side. You really know what each individual player is coming to achieve when they're coming onto market. Some might be hedgers, some might be speculators. So from our end, what we've just tried to minimize, and I'd mentioned this before, in terms of position limits, in terms of client limits, just make sure each client does not hold too much of holding such that they skew the market or corner the market. And also in terms of real-time surveillance, we do have real-time surveillance just to ensure that any disruptive market practice, any investor who thinks that they are coming onto market just for manipulation purposes will just be able to be effectively curtailed. And for that matter, just ensure that the sanctity of the market is preserved.
Okay. And you've talked about the state of the stability of the market itself. And Sarah, I want to get your sense in this. Whenever we are rolling out a derivatives market across the world, one of the key items we look at is the systems audit and the level to which it has been scaled up, the ordering, the placement, the clearance, etc. One of the challenges we've had with the NSC lately is outage, and it's been happening recurrently. And many of the people who would potentially invest in this are now asking, are we going to have this scenario coming into play? How do you feel the NSC is prepared, before I get back to Rufus on this, in terms of the systems audit and just to ensure that this thing, all T's are crossed, all I's are dotted ahead of tomorrow?
I think the pilot phase, was key, because when they actually carried out the 2 pilot phases, they proved that during the pilot phase it ran very well, and then I think that helps bring confidence on our part. And then I'm hopeful that NSE has been upgrading its systems. And so going forward, yeah, that could help.
I like the word hope there, Rufus. Systems audit.
I think just to her point, the last 2.5 years, we've done extensive user acceptance testing just to ensure that the system is fit for purpose and it just enable us and investors to achieve their goals and objectives. The key difference between our market and the spot market is the different entities in play. Whereas in the spot market, you have a depository, which is a different entity from the exchange. Here, in terms of the whole trading and clearing cycle, it will be housed under the NSE. Okay. So there will not be any interplay or dependencies on any other player outside the ecosystem. So it will be fit for purpose and dependent, and based off of that pilot phase that we undertook, then we are confident that the ecosystem and the system itself is fit for purpose and first in class.
Okay.
Yeah.
And Tony, now just to look at what we have been mentioning here in terms of the outage at the NSE, and one of the key questions we normally have is what impact, what cost does this have? Forget about the investors, but as an economy as a whole, I know it might be a big challenge just to quantify this, but what's normally your sense whenever we report on this kind of development, that we had an outage at the NSE from 9 a.m. to, let's say, noon or whatever time it is, in terms of the impact this has on the wider scope?
Okay. It's difficult, as you say, to quantify specifically the extent of the effect of it. But I think the biggest issue is the signal that it gives. The signal effect is that in terms of confidence, we probably are not well prepared as the signal effect that it might give out. So I think it's a challenge that we are still facing, and I think NSE, as Rufus says, they're up to the game, and so they will be stepping up in itself. But to the wider economy, I don't think it's a bigger thing to the economy itself. I think it's specific to the financial market side that will give an impression about anything about the economy itself. But it's a challenge that we are going through. I hope, like Sarah says, we hope that NSE are doing something about it. Yeah.
Yes. And Rufus, just to get some thoughts on you about this from you rather. One of the key challenges we normally have around derivatives coming up in a market is that it integrates it to the larger global economy. And the net effect is that now volatility of capital flows now actually has a significant impact. If you look at the Joburg Stock Exchange, for example, that tends to happen quite a bit. How would then NSE cushion itself around this kind of development? Because effectively, the moment you roll out derivatives, a lot of foreign investors now develop interest in this market.
So I think in terms of capital flows, it's actually a good thing. If you look at it, it's actually a good thing. One, as we mentioned, there'll not be capital flight in the spot market. So what you'll realize over time, it might not be in the first 1-2 months, but over time you'll realize even the volatility in the underlying share market is effectively managed. Why? Because instead of having capital outflows, as we are currently experiencing, you do have more inflows coming into the futures market as a way of hedging. So it helps both markets find an equilibrium, and also in terms of price discovery, as Sarah had mentioned. Price discovery after the two markets have been introduced will be phenomenal. We'll be almost getting value for buck for every security that we have there.
And just for the sake of the wider viewers, we keep on mentioning this price discovery. If you could just clarify precisely what we mean by that.
Price discovery is essentially where should a share be trading? Where should a contract be trading? So having two avenues through which one can get exposure into the same security, for that matter, Safaricom share and Safaricom futures, then the equilibrium will be found between the two markets and effectively help us discover or help us determine where the actual underlying price should be.
Okay.
And on top of the fundamentals, of course, of the
see.
company. Yeah.
And Sarah, many people are asking now, with the derivatives market, will we likely see a huge impact in terms of the NSE performance? Because we've been on a bit of a downtrend. Are we likely to see a flip back courtesy of this development?
So that will depend on the uptake and the views that investors have. So if we see increased demand for the futures market, so prices start rising on that end, slowly the spot market will also follow, and so the market would change. So, and if we see the opposite, people being more pessimistic, it might have the opposite effect. But generally, it seems like things are looking up for the NSE market. We've seen a pickup in private sector credit growth, and we're hopeful that that will lead to higher economic growth. So, like last year, the economy was economic growth was high, but that was mostly supported by the growth in the agricultural sector. Yeah. So this year, first quarter numbers are out, and it seems to be lower because of the unfavorable weather conditions we had. However, given that banks have decided to lend and the private sector is slowly picking up, we're hopeful that that will translate into better earnings for the companies that are listed. And if that's the case, then we'll see the investors slowly buying shares, and the market will improve. All right. Yes.
And if you're just joining us, we're discussing the Nairobi Securities Exchange ahead of the rollout of derivatives tomorrow. And I'm told we have Bridget Ngana from Nakuru on the ground just to give us a view of what the viewers think from that side.
Well, Gillian, it's a bright morning here in Nakuru County, and just to chip in on the discussion that you're having on at the studio, the Nairobi Stock Exchange, or the NSE rather, is somewhat of a jargon to some of the Wananchi here, but I'm just being joined by one of the small, medium-sized enterprises here in Nakuru County, and just to speak with the director to help us understand what he knows about the NSE rather, and if he would ever enlist his company at the NSE. Welcome on NTV. You can just start by telling us your name and your understanding of the Nairobi Stock Exchange.
My name is Leshano Letaruru from Universal Work Health and Safety Consultants Limited. First of all, I know in Nairobi Stock Exchange, or NSE, as it's now called, from reading the Business Daily, and listening to, there was a guy called Kolis Kantai from NTV, who used to share insights on business, and he would sort of explain about the NSE. But besides that, we've been able to also, being in business, an SME, you're able to understand the basic functions, and you would want your company to grow to the NSE way, so that you can become a stock trading company, or you can also become an organization which benefits from people joining your organization in terms of being part of the shareholders, the stakeholders.
Sorry, we really made a mistake there at the beginning. It's the Nairobi Securities Exchange, but now, maybe from your understanding, what is the challenge that companies in Kenya are facing as far as being enlisted at the Nairobi Securities Exchange?
I think one of the challenges that the companies in the countries face the most is, first of all, information, lack of information. As you know, information is power. So most organizations, most of the SMEs are started by basically by concepts, ideas which are conceptual by a person. So you sort of own the idea, and you sort of want to run away with it. And eventually, when your company grows, you start diversifying. And the challenge that we have as a country, and I'd say as Africans, is we don't think about involving other people into business making. You want to involve your family members, your spouses, and that's our idea of security, growth, and exchange. But in reality, you've seen companies which have been enlisted in the securities exchange or stock exchanges. They're able to grow because now when you have more people coming in, you become more liquid, which means you have the ability to innovate, to come up with very good and sustainable mechanisms which drives the economy upwards. Yeah.
Your company is more in the service industry, kind of. So how would you maybe fit in? Because there's a perception that maybe those who are worth being on the NSE are predominantly manufacturing or production companies. Where do you fit in as your organization?
Actually, Bridget, that's very factual. Most of the organizations which we see in the stock exchange from the olden days was like Ever Ready, mostly manufacturing industries, and very few hotels. But in the service industry, we fit in because we are part of an integral part of the economy. We deal with the most important aspects of labor, which is the people, of employment, which is the people. So eventually, I think, and progressively, we'll find there is a need of SMEs like ours, which provide trainings in health and safety and audits and all that, to be involved, because when you join the Securities Exchange, you'll be able to become innovative. Like some of the equipments which we purchase, we have to seek them from outside. Maybe we can come and manufacture them in the country. Yes.
Maybe also talk about technology and it being also the next future of the of the Securities Exchange rather. What do you think about maybe your role as an SME in employing technology to work for you? Because we've seen Facebook going big in terms of other countries that they are not the kind of traditional people who go into the stock exchange, but we've also seen Facebook and lately Uber going into that. So where does technology fit in terms of encouraging SMEs to go into the Securities Exchange?
Technology is a number one driver. I would say our biggest partner as an SME is technology. Anytime you want any information, you easily just go on Google. You can easily also just get communications through WhatsApp groups, WhatsApp platforms, and Facebook. So you have companies like Uber, like in Nakuru, we're blessed with a company called Wasili. So as technology advances, there's also the need. Every company which advances technologically also develops the need of making sure that the people are trained effectively. So it's sort of a symbiotic relationship. You have people, there's technology, and then there's the service industry which comes into play. So the role of technology to us is actually very integral, and we cannot really brush it off. Yeah.
Maybe finally, you mentioned that you work with people, and we are going into an era where we're also being told the labor market needs to also embrace technology, and that means maybe people working, the physical work would be less and more of the computers working. And also, as we look at towards the NSE, the relevance for you, maybe as a stakeholder, what would be the best benefit you'd be given to empower you so that one time, you would be listed at the NSE?
Yes, that's the goal actually, Bridget. It's one day for us to be listed in the NSE, and it's a pathway and a journey of 1,000 miles, single step. First of all, when we talk about NSE, we'll talk about the future perspective. But let's talk about now. The role that NSE is playing for some of our SMEs. For example, they have very stringent requirements which require companies which join the NSE to comply. Part of compliance comes to us, so we're already benefiting, sort of implicitly or explicitly, however you might view it, because for a company to be listed, they have to undergo so many trainings. They have to ensure that they comply with international and the standards and also the local standards where we come and play. But the support which we'd require is more information, more knowledge, and sort of what we see is the NSE being like a Nairobi issue, and in terms of having only people of a certain caliber, of a certain maybe financial turnover to be part of the members. But if it can actually, the information can be dissipated down to all the local SMEs.
A devolution of
devolution, actually, that's the word. Devolution of the NSE would be great.
Okay.
Yeah.
Thank you so much. Thank you. That was Leshanta Ruru, the Managing Director of the Universal Safety and Health Organization. Thank you so much for your input. So, Julians, as you've mentioned, what the people at the ground or the mashinani feel like NSE is purely a Nairobi affair, and they would like it to be devolved and also to embrace or be inclusive in terms of the portfolios of the companies that they would like to be listed there. They say there's a lot of potential. I've had one of your guests saying is a projection that the economy is going to grow, but the SMEs out of Nairobi feel like they're somewhat locked out of this opportunity, and they would like a lot of information to be given to them so that they can be empowered, because information is power. Julians.
Many thanks, Bridges, for that report. That's, very insightful remarks from that gentleman there. And just to bring it back to studio where we are discussing matters Nairobi Securities Exchange and the derivatives which should be rolled out tomorrow. And Tony, just to pick up from the discussion we had from Nakuru with Bridges Ghana and we always say SMEs need to list on the NSE, but one of the key challenges, aside from the NSE, is that the level of investor readiness from the SME side itself. What do you think we need to do just to ensure that when an SME is being approached, first of all, they have their books right. Then they package themselves in a manner that incentivizes investors, because finally, when it goes to the table, you're selling a deal, that's it.
I think one of the biggest challenge that NSE will be trying to help these companies, profile companies that might be solid and might be ready for that, and try to help them structure themselves to be ready for the market. I think that's one of the gap that misses, that somebody who can work with these SMEs and try to help them in terms of structuring itself on how best can you be prepared to be listed in the company itself. I think that's one of the biggest challenge. Despite the incentives that we have, I think it's lack of awareness and knowledge, and that's where the role of private equities come. They bring corporate structures that they help them scale up, and so that they are ready for that. So when you don't have a private equity firm and the NSE itself is not there at the point in time, I think it gives there's a missing link on how SMEs can structure themselves to be ready for listing itself. So that's the biggest thing that I think NSE has the job itself to do. I think profiling these companies and help them set up structure that they be ready for listing.
I think Rufus there, I owe you a right of reply on that note because you've had NSEs perceived as a Nairobi affair. What do you have to say about that?
I think even from our end, admittedly, it might seem like a Nairobi affair, but there are structures and measures in place that we are trying to encourage in order for different players and different entities like the one in Nakuru, just for them to be able to access the capital markets. You had mentioned about the Ibuka program, which is a good program, just granting SMEs and small companies visibility and giving them access to a wide array of advisors and just taking them through the cracks and the steps towards the listing journey. And for them eventually, like his dreams there, then he might be on the board being traded sooner or later.
Okay.
Yeah.
And just to stay with you, sorry, just continue, Sam.
Yeah, so on that, Nairobi being the NSE being a Nairobi affair, I think as market players, we've tried to take initiative and try and make it accessible to people outside Nairobi. So like AIB released an app recently, the DigiTrader, whereby an investor, wherever they are, Mandera or wherever, does not have to come to Nairobi. So all they need is their phone. Even Mulika Mwizi, as we'd call it, could be able, with that you just put your data and then you're able to register and start trading directly from wherever you are. So those are some of the measures, innovative measures that people are taking to ensure that people can invest wherever they are.
I see. And Rufus, getting back to the subject of derivatives, one of the key issues I've had from people already investing in the NSE is we've been told there's a list of companies which will be starting, and you mentioned them, Safaricom, Equity Bank, etc. And a question is, I already have a fundamental analysis around those companies, and the company which I strongly believe in is not on that list. And the question is, what sort of rollout are we expecting post this launch tomorrow in terms of adding more companies to the participating scheme?
So as had been mentioned, as I had mentioned before, we'll make it a more demand-driven process. So depending on what investors want, like what you want, like what the wider investment management group want, then we will be able to list contracts and just for the investors to be able to achieve their needs and wants. Additionally, I had mentioned that there is a criteria in place for selecting the single stock futures. And we want the more liquid counters. Absolutely. We want the more stable counters, just for, and you find that out of those 7, you find that they're the most widely invested, right? So we are giving different players opportunities for them, as we mentioned, just to manage their risk. And also, if you don't have the full notional amount and you find that these are the good companies that you want to invest in, then you can pay up that using that fraction of the notional for you to participate. Yeah.
And Sarah, we've been looking at a number of issues around the derivative market, and one of the case studies we have across the world is that it helps companies in terms of raising capital, so that we don't have to keep on going to banks. Depending on the kind of exposure a company has, then the less risk you have because of the hedging ability you've been given, then the more you'll be able to access in terms of credit. Do you see us eventually, as the financial services side now, banks, etc., being able to tap into this opportunity such that depending on the measure of risk we've taken in the market, then we are able to access credit at a more cost-effective rate?
It could help. But in terms of lowering the risk, the hedge, those would require additional derivatives. So the current ones that we have for borrowing, unfortunately, that does not work well. But as NSE continues to develop new products, that would help in terms of derivatives. Yeah.
Okay. And I'm told we have Martin Mwaura in Murang'a speaking on the same subject of the Nairobi Securities Exchange. Martin, if you can hear me, what are the residents saying about this?
Yes, good morning, Julians. As you have rightly said, we are on the streets of Murang'a County, where we just want to delve on our topic for today, which is Nairobi Securities Exchange. I'm on the streets just to talk to a few residents to tell me maybe what they understand about what is the role of the Nairobi Securities Exchange. If maybe they have invested in it, or are they aware that what it used to be until it changed to Nairobi Securities Exchange. Kindly join me here on set. I would like you to start by maybe telling me your name and tell me, do you know what Nairobi Securities Exchange is? Look at the camera.
My name is David Gashuhi, editor of a regional newspaper in this region. About the Nairobi Security Exchange, to be very frank, I don't know about it. I don't know about it. Yes.
Maybe why don't you know about it? Maybe is it that you lack that information, or what is it?
Let me say that the information, possibly those who are involved in the Nairobi Security Exchange, do not do maximum publicity or marketing. Most of the time I'm in the social media, and I do not see much in the social media or in the print media or in the electronic media. It's not very much featured. Yes.
You have said that you are an editor of a regional newspaper.
Yes.
Maybe if I can tell you that Nairobi Securities Exchange deals with stocks and market stocks and stuff, do you think you as an editor or an owner of a regional newspaper, can you put your paper to Nairobi Securities Exchange?
Yeah, if there is if there's a way I'm going to benefit or something, that's an area I can consider placing it in the Nairobi Security Exchange. Yes.
Have you ever bought stocks or shares?
Yes, I have purchased shares, but not from various companies. Yeah.
And you are aware that those stocks are sold at Nairobi Securities Exchange?
That's what I know, especially if I find a buyer for my shares. That is their role. That's what I understand. Yes.
Okay. Thank you so much, sir. Thank you so much for your time.
Thank you.
Okay. I have another young gentleman over here, just a youthful young man. I want you to tell me, maybe, do you know what Nairobi Securities Exchange is?
Yes, I know about Nairobi Security Exchange. Mostly it's a company which deals with stocks, where you can, if you are a banker, you can if you are a banker, you can, and you have shares, you can time when the shares are shooting, you buy, then you sell. You keep on buying, then you sell. But I don't know about it very much.
Do you think it's high time maybe those such informations or the offices are devolved in the counties so that people like you and our dear friend who was before us can know about more and maybe invest more?
Yeah, I think it's a good idea. For example, if it is devolved in counties, for now it's not like like the old days. Now the youth are investing. Like I'm a youth, I would like to invest with it, to know it, to deal with it. So it's a good idea if it can be invested in counties.
Now, maybe have you ever invested in stocks as a young man?
Yeah, there was a time I had invested in stock, but later I quitted.
Thank you so much.
I'm glad.
Julians, those are some of the people that have been able maybe to meet on the streets, who have the courage to talk to the media. And as you can see or can hear from them, it's that the information is not on Nairobi Securities Exchange, is not so much known here on the ground, here where we call mashinani. And maybe the people at the Nairobi Securities Exchange can do more so that the people here on the ground can be able to know and maybe can be able to invest on the Nairobi Securities Exchange. Back to you, Julians.
Many thanks, Martin, for that report from Murang'a County. Gashui there said the stock market is a place where you time when prices are shooting and you sell. You time and you sell. Interesting statement there. Rufus, to bring our conversation now towards its tail end. In many derivatives exchanges across the globe, we normally see the bonds futures as an option on the table, and clearly we don't have it right now. And some of us would argue maybe it's for understandable reasons. We've received the question, is it something that is being considered, considering the state of our corporate bond market in particular? Is it something which NSE has in its menu?
So in terms of product rollout, again, what we intended in the initial product offering, what we're doing right now is just to make sure, even from the regulator's perspective, is that the market is fit for purpose and it is first in class. So for us, we just need to ensure that and demonstrate that the market works effectively. Then in terms of product rollout, then again, it will be a demand-driven process. We'll do a demand survey. We'll talk to the different players in the bond market, see their views, their perspectives. Then from that, then we'll decide whether to roll out the product or not. But for us, I don't think any product is off the table, of course, barring regulatory discussions and approvals.
Absolutely. Yeah. And Sarah, just to look at this now, going into tomorrow from the investment banking side, what are some of your expectations in terms of the appetite from the market, in terms of the role you'll be playing, just to ensure that this actually flows seamlessly?
So one of the key things would be increased marketing. So we've already reached out to some of our clients, majority of our clients, and that's something we'll continue to do as it progresses. And then we'll also, there's marketing. I think marketing would be key, yes.
Is a key point that you'd be looking at.
Yeah.
And Tony, just going forward, I mean, tomorrow will be the rollout of this. Beyond that, what would you expect from the NSE, from market players like investment banks here? What would be expectation in terms of just bringing this whole product to fruition and not like some of the past we've had from the NSE?
I think one of the main things we'll be looking at is uptake. How will market respond to it? So in terms of volume and uptake, and so in the medium term and in the long term, we can have a trajectory on why exactly can we look at. In terms of capital flows that Rufus has talked about, there's a capital flight. So those are the things that especially economists will be concerned about. Can it try and stabilize such kind of capital flights? So those are the main things. In terms of stability in the financial market itself, those are the things that we'll be looking at going forward. So I think it's a promising thing, and it's only a matter of time on how NSE implements it, and then we can see the good benefits of it.
Okay. Sarah, looking at this from an institutional investor side, one of the arguments we normally have from them is that this market doesn't offer us a lot of variety. If you look at the pension funds, for example, we have about R1 trillion shillings worth of assets under management, and the concentration is in fixed income and equities. And someone was asking, aren't we just deepening concentration in one area, or would you argue now this is further diversification within the same area?
It actually is further diversification, even in terms of the classification. So there is CMA allows certain percentage that goes to equities, and the allocation to derivatives is different from that. So derivatives is a different product, so that's diversification. And then also the introduction introduces one of the problems we've had in the market is illiquidity. Yeah. So certain counters are held by portfolio managers, and they tend to hold, because their investment horizon is long, so they tend to hold it for a long period of time, and so investors cannot buy into a share, they can't get access to a share that they do like. So with this futures market, that would probably increase liquidity in the market, so it will really benefit the market.
Rufus, on the same?
I think it gives, in terms of diversification, it will give, of course, in tangible benefits to investors who already invested in this market. So for them, in terms of hedging, in terms of deploying different strategies that were not early available, you would appreciate right now we are on a buy-only market. So in case of any downturn, as we've mentioned, it's just capital flight from our capital markets and our economy in general. So for them, it will give them a different ways in which to manage their portfolios, and efficient ways in which for them to manage their portfolios. And it will be highly encouraged for them to participate.
I see. And looking at the index futures, one of the key points that has emerged in the recent past in terms of the structure of our indexing is that undeniably Safaricom has an outsized influence on the indices that we have. Yeah. I mean, it's 1.1 trillion shillings in market capitalization. That's about half of the market. Yeah. Is it time that we decoupled Safaricom from the indices? Just to get your thoughts around this, because essentially wherever it moves, that's where the market moves.
I don't think that will be representative, because the reality on the ground, if Safaricom is big, it is big. So it will not be representative of what we have. And admittedly, and again, you'll find investors, even if we decouple it from the index, you'll still find investors willing to purchase Safaricom, willing to invest in Safaricom. So I don't see any, even in terms of obvious benefits from decoupling it from the index.
But a counter argument to that, Rufus, would be that it does give a skew in the market such that Safaricom could be going up, but the rest of the market, let's say, is going down. Is it giving a wrong impression on the market trajectory?
Maybe if I could answer that, I think one of the other ways in which we can look at doing this is having sectoral indices. Yeah. So if we decide that we want a banking index, if we decide we want manufacturing and allied, agriculture, then as a market, we need to sit down, work out and thrash out the nuts and bolts of it, and then decide how best to roll it out. So again, it has to be a market-wide led discussion, and those are things that we're obviously open to.
I see. And Tony, just as we get to the tail end of this, we are rolling out the derivative market at a time when there's a lot of flux, if I could say, in the global global environment in terms of capital flows.
Yeah.
We've seen the impact it has had, for example, on the South African rand, on the Turkish lira.
Yeah.
Do you feel that we could be going in at a time when we are significantly exposed to, because we're banking a lot on inflows, capital inflows into the market, at a time when this could impact the kind of appetite we see?
I think my view would be different. Looking at the issue about FDIs, that is trying to stabilize the shilling itself. The moment we have a derivative markets that has good uptake, I think we'll be expecting capital inflows. So it will be one of the ways to diversify on capital flows that come in stabilizing the shilling itself. And so it's true that at the global stage, we have quite a number of risks that we're exposed to. Yeah. And so we need to find best ways on how to mitigate that. I think on the currency side, I think derivative exchange will try to help in that sector itself.
Okay.
Yeah.
Sarah, do you think we are ready for a currency futures market in Kenya?
I think it would be something good to have. It would help with price discovery. However, it would introduce a lot of speculation and increase volatility of the market. And the impact of that would be what we're trying to, it'll actually have an opposite effect of what we're trying to achieve, whereby we want foreign inflows into the country. And when the currency is volatile, it will actually lead to foreign outflows. So I don't think we're ready for it right now.
All right. I won't ask you that question, Rufus, because I know where you sit. Your heart is very different. But there's been a lot of concern around the NSE, and some of the feedback I'm just receiving via social media platform is that it's been a bit of bad year, if I could say, the delistings that is happening, the kind of performance that we're seeing, profit warnings, etc. In your assessment, what is the state of the NSE? I mean, you're an insider. You could speak about this.
NSE, the company or the market in general?
The market in general, not the company.
I think we are in that state. The market responds to how companies behave. So I wouldn't say we're in a very bad place. I think, and of course, there are a lot of macro factors that determine where our companies trade and what we have. But as the market, I think having these new initiatives coming in place, it's now us as the market for us to be able to take these products up, for us to be able to see the value and benefits that these products have for us, and then try and grow the market and bring it to a place where it's supposed to be. Yeah.
I see. Tony, he's spoken about macro factors. Yeah. What are some of the key factors you think are impacting the performance of the NSE? I mean, rate cap should be somewhere around there.
Yeah, I think rate cap is one of the main things that you look at a number of banks which are listed there. So rate cap plays the biggest role. And in terms of liquidity itself in the market, in the economy itself. So rate cap is one of the biggest issues, are macroeconomic issues. I think we also have issues with the agricultural side, companies listed in the agricultural side. We haven't had favorable weather conditions, so there is an impact to that. So quite a number of macroeconomic factors that try to affect the NSE itself. And so looking forward, I think one of the main things will be, especially if we are talking about agriculture itself, I think derivatives markets for the commodity futures will be one of the best things that we can help in this at this point in time, looking at our economy itself.
Yeah. Clearly rooting for that, Sarah.
Yeah, could I comment on the rate cap?
Absolutely.
Whereby, in my view, currently the rate cap has become less of a key issue for the Securities Exchange, especially for the banks, because I think it's been with us for a number of years and banks have learned to adopt, and we've seen them slowly increase lending to the private sector. So private sector credit growth has increased, and banks, when FAST came into place, a number of banks decided not to lend. So like Equity decided not to lend to the Kenyan market and was instead increasing loans in the regional markets. Yeah. However, this year we've seen increased loans, and actually the guidance is that the loan growth is likely to be around 10%. And so as private sector credit growth picks up, that's why I think it's no longer an issue. And then secondly, another reason why banks have been forced to lend in the current environment is that the risk-free rate has declined. So they had increased allocations to government securities, and so demand for government securities had increased, and therefore government was able to reject aggressive bids, and interest rates had declined. And so now the risk-adjusted rate of return, which is when banks compare the interest rates on risk-free government bonds versus lending to the private sector, which currently is around 13%. So the return they get has now increased because the risk-free rate has come down, and so in the current environment they are willing to lend. So this year we expect a pickup.
But Sarah, a counter argument to that is that someone would argue that if you look at budget statement for 2019-2020, we have about a 600 billion deficit, and definitely the government is looking to go back into the domestic market for up to about 200-something billion shillings. Do you see the yield curve going back upwards?
No, because demand is still high. There's still demand, and then the deficit in absolute terms is high. However, the growth is actually around 0% when you compare it from the previous year. Exactly. So overall, the demand, companies had really budgeted, sort of put the money, how would I put it? Companies had already allocated the funds to the fixed income space, and also remember there is money that's maturing. So during that period, there are a number of bonds that are maturing, and so the demand for government securities will still be there. And remember, the economy is still growing, money supply is still growing, and so there'll still be that, there's that money. So they'll still allocate borrowing to the government, but there'll still be more money left out for the private sector.
Before I get back to Rufus, Tony, there's this issue Sarah has mentioned that private sector credit growth seems to be picking up. And one argument could be that its base effects is coming from a very low base in 2016-17, therefore it's now showing aggressive growth. The other, which has been posed to me by the MP who floated this rate cap bill, that is June Jomo, is that if it is now growing, what are the banks telling us by growing this private sector credit growth? Because still we're in the rate cap environment. Are they suggesting that finally this should be the new norm?
I think your first argument is what I agree with. You look at in terms of credit growth, private credit growth. At some point it go to negative on a monthly basis, according to numbers that Kenya Bankers Association gave out at some point ago. So we are at the bottom, and we're trying to scale up now. We are trying to regress back to the mean, but it's not that fast. Even if you're talking about an increase of private sector credit growth, we are not at the level that we required. And so we still have some issues to do, and banks are trying to diversify in terms of income, where they get revenues. So I think they've tried to get other mainstream revenue incomes from their business, and so private also lending on private sector also is one of the main things now they're opening up to. But I think that the moment we still have that rate cap, we don't give them space to move the way they would want to. So there is a constraint itself that we might not get to the levels where we are required for economic growth itself.
I see. I see. Rufus, now we're getting to our final remarks, and ahead of tomorrow, what assurance can you give us as the Nairobi Securities Exchange? What should we do as potential investors to participate in derivatives?
I think the assurance I can give you is that we are ready. It's been a long time coming. It's been quite a journey, and I think we are finally at a place where we are ready to launch the market. I believe the participants have been well trained and educated. Capacity is there. So you as investors, just contact your trading member, your broker, and come on board. I think it will be a good product to have, and it really positions us as the regional investment partner of choice. So I can only see benefits in this, so join us on board.
Yeah, right. Sarah, we've mentioned a lot about trading members. First of all, how do potential investors get to trading members like yourselves, that is African Investment Bank? And ahead of tomorrow, what do you foresee going forward?
So to invest, just the usual way they would buy a share, just approach us and then express your interest to buy derivatives, and we'll take over. And then so ahead of tomorrow, I think we've built capacity, and we've proven through the tests we had, the pilot phase, the 2 pilot phases where we were at the top, made a profit. So we've proved that we are ready, and so the uptake would probably would increase with time, so will not be that high in the beginning, but slowly as people become used to it, probably people will try it and see how it goes, and then with time we expect the uptake to increase.
Okay. And Tony, your expectations tomorrow?
My expectations tomorrow. I think the good thing is that Rufus has given us his word on national TV that they are ready.
We can hold that word against him.
Yes. Yeah. So another thing would be, I think it's a good thing for companies and agents. So firms that are looking at such an opportunities, I think it's the biggest thing. So for the long term, medium term is when we look at the economic factors itself on the impact of the derivative exchange itself after a period of time. But for now, I think it's a promising thing for firms and agents. Yeah.
All right. And Rufus, before I take over, I'm being asked to ask you this question. Do we expect any listing at the NSE in the second half?
Wow. There are a number of companies in the pipeline, so it's for us to see how many we can bring on board, right? Yeah.